What's up, Jolyn?
That's what my portfolio said.
You know, I felt it wouldn't be fitting because, these past few days surely put a smile on my face. But, I could sit back like this all day and just say, hey, where are the haters at? But
where they at?
It ain't that type of day. It ain't that type of day. So, there's only one thing I know in this world. You know what it is?
What is it, Mark? I know what it is, but what is it?
All I know is win.
Okay.
All I know is win.
No matter what.
No matter what. No matter what. And today, just in full effect, because, shout outs to the Shady Side Up, by the way, for the wonderful, plug on the awesome optical sunglasses. But, I feel like, the king has finally been awoken. Let me repeat this for everybody. I feel like the king has now been awoken. So, ladies and gentlemen, the king of the Shade Gang is here, aka King Petty is in the room. Let us go. We got a lot of energy. I want everybody to simmer down. 385 didn't make it. Let me just repeat that for the people in the room. 385 puts in the room didn't make it. I feel your energy in here and I feel the weakness. So essentially it's like, you may just want to go sit aside. If you're throwing a tantrum, then, parents, go put them to bed. XOK, XOY, just usher them to the bed. Because today we put the kids to bed and then ultimately we have a great conversation. Don't get me wrong, today's episode is definitely going to be PG. And shout outs to my ultimate good friend and co-host, co-producer, and co-creator coming all the way from Galactic and is definitely rocking the locks. Ladies and gentlemen, the wonderful...
What up, y'all? jolyngc is the place to be, and when that portfolio is smelling like money, I'm so excited, and I'm happy for y'all too. I heard so many things on the Twitter timeline about what them games is looking like.
Yes.
We got folks setting dates, like actual dates.
That's what I'm talking about.
Whether a walk away instead of this, someday. One day, I don't even know what day that is. It's like, what if our ancestors just said, oh, one day, someday, whack, you gotta have a date. So shout out to those of y'all who actually have a date. And if you can, put your date, your walk away date in the chat.
Yes.
Let me see. Got to get some accountability. Let me see what y'all working with.
Speaking of accountability, if you haven't subscribed yet, I don't know what it is. If you're new, then, Jumbo, welcome. We, appreciate your existence and you definitely being here and your presence is definitely felt. Thank you. But if you've been around for quite some time and you haven't subscribed yet, I don't know what you want. So, again, I want you to do something special today because we about to literally sit down and have a conversation, for real. And this is like one of those kind of conversations where it's like, hey, a lot of folks have been talking. Now you got to come outside because I'm here and Jolyn is here. We're out here. So come outside. So when we mean by that, definitely bring your friends, invite everybody that you can to this episode because this is definitely one of those for the record books and just sitting down and let's just be real with each other as family. But if you've subscribed, thank you. I just went on that whole soliloquy just to give you that timeline so that way you can subscribe. We're seeing the dates being thrown in the chat. We appreciate that. And on top of that, if you like what we do or if you like the video so that way it can get out to other places because y'all, it went from the United States to Canada, from Canada to Africa to Europe, all over the world. And we want to keep that same energy going. So thank you for hitting the like button. And on top of that, if you want to be in the know for when we drop new videos, which shout outs to Steve, and we're finally almost here. We're going to actually have some new content that's going to be posted pretty soon, so be on the lookout for that. So shout outs to who that was first in the chat, Jolyn?
It was Lanny.
Lanny, shout outs to you. You were the first in the chat, so that lets us know that you were probably had your bell ready for when the video went live, and you said, hey, I'm here. So shout outs to you, Lanny. We appreciate you. So, Jolyn, we got a lot to get to. In so little time.
Right.
So let's get to it.
Right quick, talk about what happened today. Okay, so boom. No, just kidding. Here we go. We got the Dow, you know, a little something something with the 15.73 points. S&P 500, 8.31 points. The NASDAQ, 9.01 points. The VIX holding it steady at 15.98 points. The 10-year Treasury note, 1.619. Shout out to 1619. Okay. Now we got sector performance. As you know, there are 11 sectors. We track all 11 of them, including the top 3 and the bottom 3, so we can see what that rotation is looking like. And if you didn't know, rotation is things are rotating. Okay. We got energy, utilities, and health rounding out the top 3. For the bottom 3, we have financials, communication services, and industrials. Note that communication services and industrials were both in the negative today. Then for pick performance, shout out to the top 3 picks. We got UPS, Nvidia, and DraftKings. And let the record reflect that UPS came in at 6.95% today. Nvidia came in at 6.70% today. And DraftKings came in at 4.12% today. Then for our bottom beaters, we got FTNT, which is cool because, you know, FTNT has been having 52-week highs, so it just took a little break, parking around the 321 level. We got EAT and CWeb all on the bottom, but it's all good. Shout out to the parents just off GP. Shout out to XLY. Shout out to XLK, and we'll get into that more. And Mark, you know, we got some questions. And then we got, you know, I heard we got a Sermon on the Mount. I
feel like I just need to get comfortable here because, you know, I feel marvelous. Don't get me twisted. But yeah, at the same token, shout out to Tuskegee University. Homecoming weekend was this past weekend. Shout out to all the Tuskegee University alumni in the building. We love y'all.
Yo, I do want to say, like, I'm seeing these dates. And shout out to those of y'all that have a full date with the month, the day, and the year. Like, that's how you know it's real. I'm looking at these dates. It's looking good. It's looking real good.
Yes. I even saw Juneteenth walk away in there.
Yeah, I saw Juneteenth in there. Okay. Where do we start? You know, because I think we just need to get right into it, you know, rip the Band-Aid. There's some things. There were some things that were said, and then there were some other things that were said, and then there were some things that were said again, and then folks were coming sideways. So, you know, let me just get my water together right now.
Yeah, you know, there were some things that were said, you know, for example, you know, there were folks in whom which that, you know, kind of got a little bit of paper hands in the process because of the fact that, you know, I understand that they were new. So, you know, no shade included on that one. It's like, you know, when you're first getting started and it's like, you know, you're just getting at the very genesis of your journey, it's like it can look very scary. So that's the first part. But definitely want to send a special shout out to all the folks out there that talk very ill about, like, you know, the pick list, you know, XOY, AMD, Tesla, FTNT is trash. You know, I don't even know why. It's highly overvalued and nobody even knows what the company does. You know, all these interesting things, and yet, you know, they were the same folks that were using the picks. Like, they were the same folks that were using the picks. They were still in the same discussion and everything else. I just don't understand that. Like, if I was a company, I feel very, very offended, you know. But, you know, I feel like, you know, in the market, you know, especially the folks that talk very ill against, you know, your stock ticks and everything else, it's like, you know, hey, they get participation trophies as well. So, you know, hey, that's where we're at. But shout outs to XOY. For those, like, all jokes aside, shout outs to everybody that was in XOY that literally stuck with the conviction and everything else. You see what conviction plays, what hard work pays off. And the interesting thing about it is, I look at it like this, and we're going to get into some wealth talks today, but it's very, very interesting because, you know, like they say, the quote is, heavy is the head that wears the crown. And sometimes you're going to have to walk that lonely road in this wealth journey by yourself, and everybody else is going to look at you like you foolish and everything else. And then when the beat drops, you know, it's like, you know, you could choose the humble route with a little bit of shade on the side, or you can literally just go out there and talk your talk. And, you know, today I feel like it's time for us to talk that talk because, You know, I could have sworn if we roll back the timeline a little bit, we kind of said that, you know, especially like within the perspective of your AMDs, your Teslas, your XLYs, and everything else, we said that they would have a pretty dope year when the seasonality factor comes into play. We also said that essentially that we expect them to possibly outperform technology. We also said, we definitely said this, especially when people started to get a little bit nervous, we also said that essentially it's like, yo, are you willing to bet against the companies that have brought you here or that the companies that have brought the market here thus far? So, which means that are you going to count on GE? Are you going to count on Boeing? Though that shout outs to Boeing, they're getting their act together. Are we going to count on Intel? Are we going to count on some of these companies that are becoming quite legacy? And what I mean by legacy, that means that your journey has come to its end and now people will just read about it. We're talking about essentially the new bloods that are here, the new dominance that is here. It's kind of like Michael Jordan literally having that torch passed on from Larry Bird and Magic Johnson, letting them know there's a new sheriff in town. So allow us to reintroduce ourselves right now. We're the Come Up series. We're the new sheriffs in town. We got this, people. So when we mean that by we got this, it means that essentially that we looked across the board, we looked across the field, and we saw that there was a new standard that needed to take place. We said that the game needed change and that we wanted the people to play the cashier. So to each and every single one of you that stayed tried and true to your conviction and everything else, congratulations. You know what it's like now to play cashier. So shout outs to you. Stay definitely objective and everything else. And get ready for the next one. But I know that we got questions. There's going to be some pettiness here and there, but just know that it's all in jokes and fun. Maybe.
I do want to say something. I do want to say something about XLY though. So, you know, that was the first leverage play that was introduced on the Come Up series.
Correct.
And you can check the receipts. There were some very strict instructions given with that play, and that play was for certain cousins that were ready to enter a leverage play, aka if you had something to leverage, aka if you had liquidity to leverage. If you were still in the liquidity phase and you got into XLY, that was not the move.
Yep.
So you can roll that tape back and read those receipts because there was disclaimer upon disclaimer in that. But I will say though, you know, this is not a matter of, what do they be saying on Wall Street bets? Like diamond hands and paper hands. Like, y'all, that does not apply over there.
That does not apply. It's just a joke.
On that, leave that over there.
Yeah.
That's not even culturally relevant.
Not at all.
Focus. So many of you got your 100% off XLY and then bounce. It was a leverage play. So you had to decide what that leverage was looking like.
Yep.
And then some stayed the whole time and watched the 100% go from 100% to less than that, and at various levels. And there were no stop losses set. There was all kinds of, you know, things going on. Now, I'm gonna keep it all the way funky. Me personally, when it came to XLY, I got in below, I think it was below $2 at the time. Wrote it up to about $4. Exited out.
I remember that.
Re-entered. Exited out. Re-entered. Exited out. Got in last week at 70 cents. At 70 cents, y'all.
Congratulations.
Let me go check on XLY. Like that, XLY had been printing all year. So I was like, let me go check on XLY. Got in the 70 cents. I was like, even if this just doubles, that's cool with me. That's 100%. What is XLY at? How high did it get today? Like, we would have to check the chain. But again, all of that comes with,
I think it got up to like $4.
Yeah, again. So I just kept, you know, that was like the step parent. You know, we're in that, I guess, that adoption phase, you know, just getting to know each other, you know? And every time I asked for, you know, a little allowance or something, XLY came through. Now, you already know XLK stays coming through, but XLY in particular. And it was a lesson. That was like, a play that you could just constantly keep going back to, and you could get your 100%. So I just want that to be placed on the record, because we have some folks that held on all the way to, you can see there's still like 23,000 or something like that on that play.
Yep.
As far as open interest, there are folks that just held on, and saw it go negative, whatever, 90%. What, I don't even know what the percentages were, because I didn't let it sit for that long. I just kept going in and out, in and out. That was me. But at the same time, y'all, there were so many lessons to be learned. And like, if you're honest with yourself, there were many people that got into that play and they weren't ready
at all.
And Mark, let the record reflect. Do you remember? Do you remember? Do you remember the death threats? Like, y'all are tripping. I'm not saying it's y'all that are watching right now.
I'm still here.
I mean, folks were in their feelings, and it's, I get it. I really do get it. There was someone who was like a mentee to me, and they wanted to get in the play, and it went past, I think, like a $2 mark.
Mm-hmm.
And I told that person, I was like, this play is not for you. Don't do it. They didn't do it. And there was FOMO, and we already know
it's not a strategy.
And they didn't get in, but they got into some other things and enjoyed the fruit of that. And they were able just to watch that. So sometimes, like, and now this also applies to Tesla. This applies to all the plays that were talked about that people couldn't get into. So many lessons learned from those plays. Like, I'm gonna let you know right now, XLY, Tesla, and AMD have been the biggest teachers when it comes to all these things that we've talked about. Like, I've learned some hard lessons, okay? Like, with Tesla, with AMD, with XLY, and they've all, at the end and the beginning of the day, they've all been profitable. But there was some pain in that. Like, I went back, Mark, I was just telling you this. I went back and looked at some of the old Teslas that I had.
Oof.
Woo! Compared to today, like, I had sold them at a profit, y'all. But I sold them, and I was thinking, dang, if I would have held on, Lord have mercy. For today, oh my goodness.
But so speaking of Tesla, like, because remember, Tesla is like that company that everybody was like, oh, well, Elon said that they're going to be $1 trillion company, that they're like, he put them in the same conversation with Apple. What is he smoking? He must have been on Joe Rogan's episode too long. Or the fact that, oh man, he can't do it without regulatory credits. Okay. Then on top of that, it was like, all right, well, we can't do this. What about Ford? What about GM? What about all these other players and everything else? Yes, what about them? I'm waiting to hear. We're still waiting to hear. What about them? We had folks out here like playing, what is it, $300 puts on a company, and for what? Please tell me, for what? Please tell the class for what? Like, what was the purpose?
Wearing them shorts out of season.
And then it's like, now it's like everybody wants to act surprised and everything else that this company is like literally sitting at $1 trillion in value. It's like, and then okay, this is where it gets really funny, because then you got the these new pundits out here talking about, well, they don't deserve to be at such a valuation and everything else. Oh, really? Well, did Amazon not deserve to be at that valuation back, way back when? And then ultimately it started to come to fruition and started to prove itself. A lot of times when people look at PE ratios, they think about PE ratios as it pertains to as of today. But yet at the same token, last time I checked, all PE ratios are forward times earnings. But that ain't none of my business, because that ain't my portfolio, and I feel bad for the folks that got into trying to bet against a company that literally is going to redefine exactly what technology and a lot of automation will be. But hey, what do I know? I'm just a former managing partner of a venture capital firm that invested in over 80 companies, has been trading and investing within the stock market for over 18 years. So exactly what is it that I know? But again, I don't consider myself a guru at all. Don't
I
consider
hate
myself
that
a
word.
guru. I really hate that word with a passion. Why do I hate that word with a passion? Because I don't consider Warren Buffett a guru. I don't consider Ray Dalio a guru. I don't consider anybody that even talks on CNBC as a guru. Now they may be great. I mean, don't get me wrong. They may know their stuff and everything else. Dan Ives, you will literally sit here and geek out with me pretty soon in the near future. Shout outs to you, Dan. But at the same token, it's like I don't even think he considers himself as a guru. We're lifelong, probably researchers of information and studiers of the market. Now, anybody that tells you anything else outside of that, then you really need to look at them with a side eye. And then also at the same token, all those other folks out here that are, you know what, we're gonna just move on. Let's just move on.
Yeah. Yeah. But
we got some
we do have
questions, and then we're gonna get into some wealth talk. So let's go ahead and let's just do it.
Let me just pull these questions up, okay? Because some of them we can do in a lightning round. Now there were some questions about earnings.
Let's do it.
So I think there was a question about visas.
Yeah, shout outs to Visa. I mean, major beat on the top and bottom line. Essentially, they said that transactions, especially when it comes to digital currency, is on the rise. And, a lot of folks think that, because of the fact that you see all these new fintech companies that are out here and everything else, Visa, last time I checked, is still everywhere you want to be. It definitely is still everywhere you want to be. So even when you had digital transactions, to literally say that Visa is not going to be in the conversation alongside with MasterCard and Amex, which Amex was really the company that started the whole show. It started the whole show with its earnings and let you know that, credit spend is definitely, still doing its thing, still alive and well. You guys can talk about inflation and everything else, but when it comes down to it, people are still going to go out there and buy dinner and go out there and travel and stay at hotels if they want to feel a little bit more adventurous. And then on top of that, you're going to have a bunch of other folks that are just going to put things on credit and ultimately collect the points. And then at the same token, when that bill comes through, they're going to have to use that Visa card to ultimately pay that bill back. And at the same token, people are going to use their Visa transactions to pay for, think about it. How do you get cryptocurrency? People use Visa cards for that. How do you think that people pay for their Uber Eats? You use Visa for that, or MasterCard. So essentially, digital transactions, they've been here. Like, they didn't really need the debit card. They actually started going digital already when you started making online purchases. They were already here. So I say that, hey, we're definitely in the early innings. We're still in the early innings for digital payments and everything else, and I still think that Visa's going to be right there. So, at the end of the day, shout outs to Visa. You had a wonderful earnings, and I think that it's just going to be more to come.
So we got some other questions. Here's a question. Well, it's more like a comment. So, and what you think about AMD. So it says AMD blew earnings.
Yes, it did.
What is next?
You know what? Should I just drop the spoiler alert?
Yeah.
Because I like to speak in spoilers. I don't like to speak in maybes and everything else. And it's no crystal balls and none of that other stuff. It's just like research. Here's what my research says. AMD has been dominating on the EPYC server chips. Butter, come lay down. AMD has been literally rocking it for quite some time. Now, of course, their highest margin is their custom SoC chips, which they work with other players. Don't worry, I'm going to get to that in a second. But the other part is the server space, the enterprise space. That's a high margin area because of the fact that, think about the cost as it pertains to companies looking to transition within that area, and you're typically buying a chip. So what you would spend to buy, let's say, a desktop PC, so for my chip, I would spend $800. But for an enterprise company, they would be spending anywhere from $4,000 all the way up to probably close to $10,000 for a server chip. So if you really think about it, there's a reason why the PC market is starting to take a dip because of the fact that it's a low margin area. So it makes better sense to go into high margin areas, aka enterprise customers, satisfy them, and then when the market starts to somewhat simmer down and things start to get to an equilibrium, then that's when you'll start noticing that the PC space will start busting again. But here's the thing to also keep in mind, because I did say SoC chips. Now, a lot of folks think that because Apple is moving into this thing called their own chips and building like their own space and their own bubble, that AMD is not going to have any place there. Think again. If you read that earnings report, AMD definitely quoted and said that, hey, our RDNA 2 graphics card chips as the Pro series for those Mac Pros is definitely going to be there in those MacBooks. I don't know about Intel, and shout outs to Pat, trying to say, hey, we're going to try to get back in Apple's good graces. Good luck with that. Walk on. You may need to find a new player. But come January, watch this announcement. AMD chips will be in the next Samsung phone. And I'm probably guessing series of phones, probably starting off with his flagship phone. And that's very, very interesting because now that puts AMD in competition with the likes of Qualcomm. And then on top of that, Samsung's chips can now possibly make an entrance into the US market, which they haven't been unless you bought the international version. Now, why does that matter? Well, think about it. Somebody Google and find out exactly how many Samsung phones naturally sell year in and year out from Samsung. It'll shock you.
All right, keeping that same energy. We got some questions about, okay, so Intel long term, lagging the industry, but lots of infrastructure. Any potential acquisitions essentially that could
Say that one more time. I'm sorry.
so it says Intel long term question mark, lagging the industry, but they have lots of infrastructure. And do you see any potential acquisitions that can serve as a catalyst?
Here's the thing. They're going to have to acquire a lot of commercial space. They're going to have to acquire a lot of stuff. And here's the challenge with Intel. You know what? Jolene, are you feeling like going to some charts today? Because even on a day like this, King Petty can definitely go rock some charts.
Yeah, always.
Okay, well let's get to it. I feel like, and how fitting for us to start off with none other than Intel. All right, so let's break it down, y'all. This is Intel's chart, not on a 1 year. This is Intel's chart on a 5-year basis. So again, this was Intel at the height in 2020. And then look at where we are as it pertains to April of 2021. And then since then, it's been like, what's going on? Now, they've been having quite a tumultuous time. Now, if you look at it overall, the last time that Intel has actually been at a high was back in 2000. The dot-com bubble bust. And then essentially we saw what happened, during that time period. I don't think that was Intel's fault. They just happened to be, collateral damage at that time. But either way, they haven't made it back to this high in I don't know how long. And the question is, you have to ask yourself, are Intel's best days ahead of it? Or are Intel's best days behind it? Because if we come in on a 5-year chart, it's looking very roller coastery. So essentially, if you're looking at Intel on a long-term basis, I don't know. I think that this is definitely one that, if you are really gung-ho on Intel, then you have to have a stomach of steel, because ultimately, I don't know if I can go on this type of roller coaster ride. I just don't think I could. 1 dip, maybe 2 dips, but this many dips, no, this ain't my speed. So I think that there was a lot of hype built into Intel and what they can do and what they can bring in, and there was a lot of high anticipation for Pat to come in as CEO and just literally be this type of maverick to change things. No, that's not going to happen. And I think that Wall Street's starting to realize that very quickly. And ultimately, what's going to happen in the stock, I think that it's definitely going to do what it always does. It's going to find some type of base. And then from finding that base, once it finds that base, it's going to have some glorious run up because of the fact that somebody's going to go on their hype machine and literally start hyping up the company Intel, like, oh, they're doing this, they're doing that. We've been talking about Mobileye for quite some time, and yet I still have not seen Mobileye really do its thing on the road. I still haven't seen them brag anything about Mobileye. I've heard more about NVIDIA Drive, and NVIDIA Drive has more actual real-time driving miles than Mobileye. I mean, I'm struggling here with Intel. I'm struggling here when it comes to having a long-term strategy for this company. Now, do I think that maybe 3 years down the road that there's a possibility for Intel? Yeah, if they get their act together and actually have a process for their foundry system for companies to possibly even work with them. But then there's even that problem. How many people actually want to work with Intel versus essentially going with some of the other players that may even be cheaper? So we don't know. I mean, I think on this one, if this were me and if somebody was giving me, if this was me talking to myself, I would literally say, bro, you want to sit this one out, because this ain't your fight. And if you seen just like, if you look at here, just where Intel was, where we look at from October 21st to now, and then on top of that, looking at where we were at the high back in April 12th, and we haven't even gone back to reclaim that. Look, man, that's just a fight that you just saw somebody get stomped out, and then you said, and then they say, okay, hey, you want next? Nah, I just saw what they were capable of. I don't want this.
Okay. So, oh, this was a question that we don't have the answer to, but y'all can answer this for yourselves in the chat if you want to identify in that way. The question is, could you give us an update of how many cousins have walked away? No names needed. It's inspiring. So if you want to identify as a cousin that has walked away, feel free to put that in the chat. We don't keep track. We don't have like a list and keep track. We just know when, someone reaches out to us, and
it's a lot. I mean, it's a lot. I mean, it's. I'm not saying that we're in the hundreds or something like that. Please, y'all, we just got started. But I mean, for us, we see it as a lot. Every single time, even if it's just one person, that's a lot. Just to see that one person has reached an area of financial freedom in which that, their life and time is not dictated by what somebody else tells them what to do or anything like that. They can do what they want to do freely, without having to worry about any consequences or repercussions. So, yeah, I would literally just say, congratulations to everybody that has literally walked away. Your story, even then, is just now getting started. Welcome to the next journey in your life. And for those in whom which that are aspiring to get there with all the dates and everything else, stay tried and true to that, and ultimately stay disciplined. The biggest thing that ultimately really knocks people off their rockers or just gets them out of whack is that they just don't have a lack of they just have a lack of discipline. So if you have that discipline and you remain objective and you actually have a plan that you're following, you're gonna be fine.
You know what's so dope about the cousins that have walked away? Like, it's not just them that's walked away. It legit is like their entire family has walked away if they go back for them and put them up on game.
Mm-hmm.
That to me, it's like you're multiplying yourself. Hella franchises out here. That's lit. All right. Next question. We have, if earnings is a bad time to enter a position, how long should I wait until after the report?
So if earnings are bad and then essentially you're looking to come in, I mean, honestly.
No, well, it says if earnings is a bad time to enter a position. So, we talk about like you don't want to play earnings.
Yeah, so you always want to wait till at least the coast is clear. I mean, let the stock find its footing first. I mean, even if it means that you're not there exactly on the day, that's okay. I mean, what you're looking for is more so stability first. Let the stock show you that it has signs of stability. It's like, you wouldn't walk into a relationship, with a person and there's no stability there. Why? Because it's just shaky ground. So again, it's the same way when we look at the stock market or when we look at any investment. You always want to look for some type of confirmation or some type of, like, you look for a signal and then you look for that confirmation that lets you know that the coast is clear and that the road to success is clear as well.
Right. And there is an episode on confirmation.
There is.
So I don't remember what episode it is, but it's...
We've done so many.
Yeah, it's one of these newer ones. It's not like an old one. It's one of the newer ones. So you may need to just ponder replay on that one.
Just be careful, though. It's like, I always tell people it's very easy for, so many different voices to get inside your head from different sources and everything else. Mm-hmm. It's kind of like, having those friends around you that have never really had successful relationships, but yet they're all of a sudden giving relationship advice on social media and everything else. It's like, that'd be like a person telling you how to be wealthy, and it's like they don't even have the blueprint. Which, I mean, simple road to the blueprint. How do you know that you're getting there? I'll drop a gem in there for you guys. When your passive income supersedes your expenses. So not your active income, because your active income only just keeps you afloat and keeps you going. You use your active income to literally use that to literally create passive forms of income for yourself, even if you're using the market as one of those tools as an investment. or real estate, whatever it may be. But when your passive income supersedes your expenses, then that's when you know that you're there, because then that way you know that you can prepare for yourself and that you can do things on your own. A lot of folks like try to step out there on no solid ground and everything else while they're still while they still not, I wouldn't say desperately need, but while they still strongly need the active income. Just know yourself and know essentially what your strategy is and be real with yourself when it comes to putting forth a plan.
Yeah. Oh, and thanks, Tivo. So September 14th, Market Signals, Noise, and Confirmation is the episode that talks about how you locate confirmation on the chart. So thanks, Father Time. Appreciate that. All righty. Okay, here is another question. Advice on how to emotionally detach from a one contract gain position that is hella green with hella time.
Again, that's where it comes down to knowing exactly what your exit plan is. A lot of investors or traders, they do very, very well when it comes to plotting out an entry. Like, you get good at entries. But just as much as you get good on an entry, you also have to understand exactly when is the time for you to exit. So when things start to get a little bit frothy, when it starts to get a little bit too euphoric, it's time to step aside. When things are getting a little bit too overzealous within the market, where we're starting to see things like you feel the market getting toppy, when you start noticing that the stock price itself isn't moving alongside with a narrative, it just doesn't fit. When you start noticing that the volume is starting to decrease, those are areas in which that you can look at and say, okay, hey, I think that we possibly topped out. And then on top of that, there's just got to be price points. I mean, if you want to be as good as the folks on Wall Street, a lot of them focus on price targets. So setting solid price targets for yourself, whether it's 15%, 20%, 25% for the year. And then once you've made that, like in the stock, now, of course, it's different in the options market, but you can still set your goals accordingly. Sometimes, here's something that I do a lot. Many times what I'll do is I'll actually set my price target for the actual stock itself, and then let that be my guide to say, okay, hey, this is my target for when is it that I'm looking to exit out of, like if I was to exit out of the stock. So now I'm looking at the exit the entire time once I reach that target or as I'm close to that target. I'm literally like that type of person where I'm looking for excuses to leave. I'm not looking for excuses to stay. I'm looking for excuses to leave.
That's a good point. Also, I mean, I feel like I think I tweeted. Yeah, I tweeted this week. For the exit strategy, there are two options. You either are going to exit with profit or exit with the loss.
Correct.
So you decide which one you're going to do, and then that's a good point of setting your price targets for the actual stock. What I like to do for the option is I always look at the price history of the options of whatever strike I'm looking at on bar chart, and I look to see where am I getting in? Am I going to get in the middle? Is it low? Like, am I getting in too high? Like, I always check the price history first, so that I'm not falling for the okie doke. And then I look to see what the probability is of that particular premium, the price of the contract, of that at least doubling. If it hasn't even, if I'm looking at the price history and it has not even the highest price for that contract that's been paid, if it hasn't even doubled from the price that I got, and there's no catalyst for the stock price to move, that's something that I'm like, okay, well, I may be paying too much for this, so let me wait until it pulls back a little bit more, and then I can get in at a lower cost for the premium. And then also, it's just important to know like the anatomy of the options contract, as far as how much of it is intrinsic value, how much of it is extrinsic
Value.
right? Like, because that's also going to be a factor. That's why it costs so much more. That's extrinsic value is also the time value. It costs more when you're getting those 2-year leaps, because they're like, well, man, you got all this time to make this money, so you're not really taking that much of a risk, so we got to charge you, we got to throw some tax on that. So you want to know those things. You can find all of that on Investopedia. Like what makes up the price of an options contract or whatever. and it will break it down for you. And you can literally see how much you've paid and what's going where.
Yep.
So that's also something, to consider, refresh those Greeks, like make
And
sure
use the
you know how they
percentages.
all work.
Use the percentages.
Exactly.
Use the percentages as your guide, because if you really think about it, it's like, a lot of folks can really get caught up into the hoopla and everything else. It's all about percentages, really. Think about it. S&P typically grows on a year-over-year basis of about 12 to 15%. So when you know that S&P has crossed over the 12% marker, then you're like, okay, hey, all right, well, I'm nervous here, but let's see what we can do, because depending on where we are in time. So if S&P is up by, say, for example, 12% around July, well, okay, we've reached the mid marker. So exactly what do we expect moving forward? And then we look at those catalysts. Then if we get to, let's say, by August, we get to, let's say, 15 or 18% in the S&P 500. Now you're like, okay, hey, we're getting a little toppy here. So of course we're going to have to correct down, maybe by about 5 to 10%. And then essentially from there, it's like, all right, well, now it's like maybe I call the top. And even if it still blows past it, essentially at least you have something of a benchmark to actually say, okay, hey, I'm comparing my data to something. And you can do the same thing when you look at individual stocks as well. Let the percentages really be your guide.
So here's a question. How would you play a gap up or gap down from earnings? Gaps confuse me.
How do you play a gap up or a gap down from earnings?
Mm-hmm.
Let's see if I can pull up one. Let's look at, I think I got one to look at actually very specifically. I know that it's like kind of like too soon maybe for this stock. Looking for a good gap stock. Does anybody want me to look at one
UPS.
specifically? Well,
UPS.
yeah, I could look at UPS. Yes, let's definitely look at UPS. I wanted to give one that like actually has a very much so defining gap. Okay, so essentially, as you see that we've completely broke out here when we look at UPS. And so essentially look at this gap here between 213 and say, for example, 205. There's going to be a bunch of buyers here that just got left behind. And the market does a very good job of being able to go back and literally fill those orders, or to fill those folks that got left behind. So essentially being able to call it though, it's something that you're not going to be able to really just call it unless you're just that dope, and you could be. But essentially what you do is just patience. You just let the patience be your guide. Here's another thing that you can look at. Look at the volume. Steady increases on a day-to-day basis in volume. Now, of course, this is a mixture of both buying and selling volume. If you want to have some of the other stuff, then you can look at things like buy, sell volume, where you can see the two different lines and it shows you. But essentially here, it's like, okay, this is going to start getting a little bit toppy in the volume, and ultimately buyers start to get exhausted. So around this point in time, then that's where you're going to start noticing that the stock itself is going to start to take a breather. So, and this is where you start to look at areas of what these gap orders and when they will get filled. And it's just a matter of patience. It really just comes down to patience.
Mm-hmm. Alrighty. Let me see. Where did I leave off?
I don't know, but I'm ready to get into wealth talk.
All right, let me get one more question in. Okay, wait. Go ahead and do the wealth talk, and I'll look for a question.
Oh no, because let's get the. I'll wait for the question, because once we get into this wealth talk, it's the conversation.
All right. I think that was some of these questions, y'all. Some of these questions
Googleable.
Yeah, you can legit just. I saw like news articles about some of these questions y'all have. So okay, hold on. Apple receiving a patent for the VR set with Retina technology. Next year debut of glasses? That's the question.
Connect the dots. If you go back and look at the trajectory of what other acquisitions has Apple actually acquired during this process, it'll start to tell you exactly where they are in the in the timeline of things for where we're getting close to, say, for example, a release of some product. You know, timelines matter, and on top of that, breadcrumbs, if you follow them, then essentially you start to get more and more information of how we're going to get there. So I would just say go back and look at the dots. You'll start to see it. I want everybody, if you need some homework, go and look at all the acquisitions, the list of acquisitions that Apple has made over the past 5 years. And then from those acquisitions, I want you to connect them to a product or service that is already released. Now, if that product or service hasn't released yet, but you're starting to see other things coming forth, then start to find out exactly where we are in the progression of things as it pertains to Apple releasing. Now, of course, it doesn't have to be Apple specifically. You can look at any company, but I just gave you a pretty dope blueprint of how is it that you can connect the dots if you go back and rewind and listen.
Here's one last question. What are your thoughts on the unrealized capital gains tax proposal by your girl, Elizabeth?
Janet Yellen or Elizabeth Warren?
Elizabeth Warren.
Whatever. I'll believe it when I see it.
Okay.
Because essentially, yeah, like I said, I'll believe it when I see it. I feel like essentially it's like what the thing is that a lot of folks don't realize, and remember this, the road to hell is paved with good intentions. You know, maybe, just maybe, people might want to put that into perspective when you think about, you know, hey, there's a lot of folks that are there in the middle class that are really trying to find a way out and that just like started to get their footing out of, say, for example, certain financial situations. And if you throw in such a tax on unrealized gains, that affects them too. You know, you have to think about all those pensions, all those 401k plans, all those folks who have brokerage accounts that are just trying to build some form of passive income as well for themselves. You know, you're chopping at their knees too. Chopping at their knees.
Okay.
All right, we ready?
Let's get into this well talk or whatever.
So, the reason why I felt like it was time for us to have this conversation, and I think that, you know, it's definitely overdue that we start having this conversation about wealth, is because of the fact that, hey, well, you know, we started off with a focus here at the Come Up series, which was to, one, make sure that everybody had a wealth goal and that they had a wealth journey that led them to the path of success for them achieving wealth. But there are some misconceptions. There are some huge misconceptions that we've had within our culture, and I think that honestly the reason why I wanted you to invite folks to watch this show tonight was because of the fact that I wanted to expose some of those myths. Now, throughout the course period of time of our history as it pertains to just our existence of being born, I'm not going to say like through the whole span of man or mankind, I'm just going to say that it's like we've had this habit of creating false senses of imagery of what we deem that things are. So, and one of those things is wealth. Like I would say that there is a ton of misconceptions about wealth and essentially what it looks like, what is it, how does it feel, and everything else. And a lot of folks attribute the first thing is they look at the first thing that when we look at wealth is, say, for example, material possessions, like, you know, like for example, income and material possessions. Income and material possessions doesn't mean that you are wealthy. That just means that you have a heavy spending appetite and that you like to buy things and that you like to stimulate the economy and make somebody else ultimately get their revenues in so that way their quarter was very profitable. But yet at the same token, that does not mean that you are wealthy. So like one of the things that people think is some people think that having nice incomes and high living standards are wealth. No, that is not it. Luxurious cars and big homes and all this other stuff, that's not wealth. So these imageries in which that you have seen for all this period of time is not wealth. It just means that if somebody had a lot of expenses, but yet at the same token, that doesn't equate to wealth. So that's the first misconception. Then there's also this thing of saying net worth is the value of your appreciable assets minus your liabilities and debts. So appreciable assets, right, represent stakes in ownership that increase in value over time. So for example, one of the things that I look at as an asset are companies that I invest in. So if I invest in a company, I expect a company to not stay at the same value. So for example, if I invested in a company or a startup that came in at a $4 million or a $10 million valuation, 5 years from now, that company should not be worth $4 to $10 million. It should be worth way higher than that, so which means that my value has appreciated over time. So then there's this thing about, say, for example, so that's ultimately how we look at appreciable asset, because the startup that I invest in is now an asset because of the fact that it's appreciating over time. Now, another thing that people look at is, say, for example, most wealthy folks in America are like, the people that you see all the time. Wrong. Very wrong. Most of the wealthy people in America that you will probably not, you won't even notice that they're actually wealthy. Like, that's the thing. Like, let that sink in. Most people automatically assume that, say, for example, if you're pushing diamonds, exotic cars, big house, and everything else, that you're wealthy. No, that's not the case. And I don't know where it's come from, where we've created these false senses of imagery, but it's not true. It's not true. Like, many of the folks, if you look at, say, for example, if you look at places like California, if you look at places, hell, like even places like Seattle, Washington, even in some places like DC, New York, you probably have a lot of millionaires per capita, and they could just be walking around like average folks. Like, Elon Musk does not walk around in Balenciaga clothing. He does not. He literally walks around wearing jeans, t-shirt, and maybe every now and then some Jordan 1s that have a Tesla logo on it. But outside of that, it's like he dresses super duper normal. Mark Zuckerberg will walk around wearing shorts and flip-flops with a t-shirt. Or maybe pants. Jeans. Jeff Bezos walks around wearing jeans and maybe a button-up or a t-shirt with a jacket. If you look at every single person out there in whom which that is truly, truly wealthy, they don't look like the false imageries and what we see on a lot of times social media. And that's the thing that we got to get ourselves over. And it's like, I feel like that's hurt the community for quite some time, because we push all these false senses of narratives of the fact that, okay, hey, that you have to be pushing this, or you have to be doing this, or you have to be spending this in order to be wealthy. No, you're doing that, then ultimately, how does the wealth stay? So another thing that we have to look at is, and I'm not going to go through all of these, but it's like, in America, we are told that high incomes and our collection of trinkets determines our success and status. We are very high on this thing called status. And for what? Like, the reason why I'm having this conversation with you all is because many of you, you're kind of coming to the very end of probably your first trade. And this is going to be one of many, or one of your first investments, and this is going to be one of many. The thing is that I wanted to kind of expel some of those misnomers of, or some of the falsehoods in which that we have that are out there, that says that you have to go be those things. You have to be pushing these things. You have to be going out there to spend. Like, it's funny because somebody said it earlier today. You will see a ton of folks lined up out there outside of a Gucci store or outside of a Nike store to purchase the newest of something. And then next thing you know, it's like essentially, you buy this $3,000 bag, but you can't put $3,000 cash in it. Like, we got to get to that point where it's like, okay, hey, what really matters? The folks in whom which that truly, truly build wealth, examine exactly, what is it that they do? Because they don't live these outlandish lives like you see on reality TV or that you see within many different places. Many of the black wealthy folks that are out there, they're out there in hella traffic, but at the same token, they're not out there stunting and ultimately just doing a bunch of stuff for show. That's just not how it works. That's just not really what it is. It's a falsehood. And it's something in which that creates this false narrative for everybody to go out there and quote unquote false dream chase. And then essentially when your dreams and when your plans are built upon those types of falsehoods, then you wonder why when they fall so shaky, then essentially it's like, why is it so easy for people to just, hey, all right. When you're building true wealth, you realize it because of the fact that you feel it. And here's the funny thing, when you get to that point, it becomes less and less about yourself. Rich people literally have expenses, and you can even be rich and still be in debt. But wealth is something like, for example, I want you to go and look up the 4 wealthiest names in the world and then see exactly how they live. What is it that they build? What is it that they do? You know, that's what it's about. Like, we got to get past this point of this impoverished mindset, like, and start thinking on a wealth mindset type of perspective. You know, it's like, if you're going, like, I always tell people, let the profits pay for everything. Let the profits pay for everything, not the principal. Because we've gotten into this habit of, you know, you work hard for your money. Each and every single one of you will probably go out there and put, you know, your best every single day, Monday through Friday, and sometimes Saturday and Sunday, to not only make a living for yourself, but also to provide a way and save up something to build up a nest egg, or to ultimately build that wealth for the future of your kids, and also for you to be able to live within it. Like, that's really the goal. But if you do not have, one, a solid wealth plan that really goes beyond the perspective of what is it that you see on a material surface, then you're missing it. You're completely missing it. And wealth is something in which that, honestly, it's like you want to make sure it's something that you can pass down. Rich people will pass down debt. You know, a lot of the
again, Mark.
Rich people will pass down debt. They will pass down debt. I mean, you want to be in a place in which that, again, one of the biggest things that I mentioned tonight is, you know, you're on the right track when your passive income is when it supersedes your expenses. So when your passive income outweighs your expenses, and we're talking about passively, then that's how you know that you're out here. And it's like, this thing is, it's like, take your time. You know, that's why I mentioned, name one person who became wealthy overnight. You won't be able to name one. And I know that people are going to try to be smart and say, okay, hey, well, what about their kids? They didn't build that wealth. They were born into it, and ultimately that still took time. That took not, like, think about it, it took anywhere from 6 to 9 months in order for you to be born, so it wasn't overnight. So those are the types of perspectives that I wanted to put into folks, and especially if this is your first time ever thinking about it, you know, just remember this. You know, stop looking at all these false narratives and falsehoods out here, because it's not true. And I think it's finally time that somebody actually said it. And I think that I believe that I'm in a position to truly, you know, say that, because I've walked that path. I understand what it's like to look at it from the other side of things, and I'm here. So what I'm telling you is that you got to find something bigger than, say, for example, the things that look nice on a display, or, say, for example, on a screen that you can just go and click buy. You know, those things are great, but yet the biggest thing is, what's the value of your name? Like, that's really where the wealth starts to come into play. What's the net asset value of your name? Does it appreciate, or does your name depreciate? We got to get past this ideal of a depreciated lifestyle. And don't worry, we'll get into that as the season goes on. But just remember this, you know, a lot of these folks out here that you see, you know, it's like champagne taste, but on a water diet. That's all I got.
Well, you know, we are at that time. And I just want to say one thing for the record, like, you know, with the 70-30 life and all that, like, don't get me wrong. There is something to be said about Black women in luxury. I just, you know, like, let it be known. Like, it's magical. But, you know, also within reason, though. Like, I'm not trying to advocate for, you know, that flashy, like, lifestyle. But, you know, it just looks appropriate. It looks appropriate.
And we're not telling people not to go out there, and we're not telling you to go out there and just, like, live like you're, you know, like coming out of a cave or anything like that. But we're just saying, like, you know, a lot of these things, like, ask yourself, Why do you want a Lamborghini? Do you want a Lamborghini because of the fact that you appreciate the car and that you know what it stands for and the engineering that's behind it, or because of the fact that you saw somebody else driving it and you said, okay, hey, well, I want it too because of the fact that I want to look like they do? A lot of the imageries in which that we set forth, and we're all accustomed, we've all been there in some way, shape, form, or fashion, but we want things in life because of the fact that we see somebody else out there. But that's, I mean, honestly, why? You know, it's more so in the sense that you got to give your life even more reason and purpose outside of just mimicking somebody else's. There's more to life than watching someone out there live it.
You know what really reminds me of my wealth? When I see cousins walking away, or
Yep.
when they, even before they walk away, when I see them like really getting something and to the point where they can teach somebody else, like that's when it reminds me of that. Like I'll just sit back and be like, dang, that's wild. That is wild. It took a whole pandemic for all this to happen, and I'll just sit back and be like, wow. Like
Yeah.
we just
I mean, just think about all the folks in whom which that became rich so fast, right?
mm-hmm.
9 times out of 10, they go bankrupt. I mean,
Yeah.
think about the folks that became instantly rich, you know, that were athletes, and 78 to 80, or is it 87%? Somebody look up the stat, but they go bankrupt or broke. Then on top of that, look at all the folks in whom which that win the lottery. I mean, you want to talk about what, you know, riches overnight? That there you go, lottery. Though that you still had to buy the ticket, but still, it's like a vast majority, the overwhelming majority of the folks who win the lottery go broke or bankrupt. So again, you have to look beyond and say, okay, hey, I got to build some type of strong value. And again, it's more so in the sense of how is it that you make your name appreciate, the name of your family appreciate its value versus depreciating it. That's the
Yeah,
biggest
and
thing.
I think where people mess up is like over identifying with the money, you know, like it's just money, y'all. Like that's it. You can decide, you know, how it's going to impact someone's life or not.
Yeah.
You can blow it, you know, if you want to, but then you're still like, I'm just gonna say this. If you were corny or lame before the money, that it's just
It
in your
only
DNA.
it only amplifies exactly who you are.
I mean,
It only
yeah,
will amplify who you are.
yeah.
You know, people think that essentially now that I got this money, I can go do this. Wrong. That's why I always tell people, it's like, yo, figure out exactly who you are now. Figure out exactly what is it that you want in life now. Figure out exactly the things in which that you want to accomplish and succeed in now. Figure out exactly like what you want your legacy to be now, and then start working on it. So then that way, essentially, by the time when you make it, then essentially it just feels like you're already there because of the fact that it feels like it's nothing new. Versus essentially just showing up there and then essentially you don't know what to do with your life and then you start making reckless decisions and then you end up back where you were.
Mm-hmm.
I mean, that's what it kind of boils back down to.
Yeah, that man, I'm craving this talk. I'm craving some top ramen right now. Shoot, you
I
know,
still, yeah,
I
look,
ain't forget.
I still eat. Check me out. I'm the type of guy, and the folks that know me know this, know that essentially I'm still the same guy where it's like, hey, if I'm hungry, I'll eat cereal or peanut butter and jelly sandwiches, still my jammy jam, though I can still cook. And at the same token, I'm the type of person where I don't go out there and buy a bunch of clothes and everything else. You know, the only clothes that you see that essentially come on my chest or anything like that is because of the fact that my gracious wife said, hey, I think that this will look good on you. But for the most part, she will even tell you that essentially that, you know, it's kind of hard to buy stuff for me because of the fact that I'm a very simple dude. Now, don't get me wrong. I could rock a suit and everything else like it's nobody's business. You never know. You may see that in the future. But at the same token, it's like I'm simple. I'm always that simple type of dude. And the reason why is because it's like I said, okay, hey, even if I'm going to be a wealthy person in the future, my goal is just to live simply. And that was that was just the code that I learned. I learned over time that the folks in whom which that are wealthy, they literally live simply. They don't try to live, you know, ridiculously lavish lifestyles and everything else. Treat yourself by all means. But essentially, it's like the reason why the whole point of having this conversation is so that way people can understand. It's like, you know, the stuff that you see on the TV screen where it's like they have all these folks popping bottles or cars and everything else. They're either leased, they're rented, or essentially it's like, yo, but yet at the same token, they have all these expensive cars. And Steve will tell you, these are the same folks in whom which that struggle to essentially like literally come up with a solid, decent budget for the music video itself that he shoots. Like, you know, put that into perspective. You know, again, we got to get past the part where we start looking beyond like the fake and start focusing on the things that actually matter. You know, real wealthy people, like imagine what that looks like, seeing Jeff Bezos literally going to black communities and literally putting his dollars there. Why aren't we there? Why aren't we investing in tech? Why aren't we providing scholarships? You know, for me, I love to do that. I just wish that there was more. I wish that there was more folks, and it's like, you know, again, you don't have to be out there in glitz and glam and lights and the stars. Again, if you get the chance, what, you know, I'll put some literature in our next, you know, books to read for the people, so that way, you know, people can understand exactly like, you know, what it means, and then you can start building a better life plan.
Time to make that top ramen mark, so it's 6:39. 6:39.
Well, I know that we went 9 minutes over, but you know, hopefully, you know, y'all were entertained and everything else. Just want to send some special shout outs. Shout outs to all our haters. We couldn't have made it without you. And shout outs to all the folks in whom wish that have been here with us, rocking with us since day one and consistently rock with us. We love you. And the folks in whom which that are new, welcome, because your journey is just now beginning. And if somebody invited you, just tell them I appreciate you, because honestly, yo, I hope that this lit a fire underneath you just to say, hey, I'm going to go out there and build my wealth and ultimately go make some changes. So again, it's a shout out for everybody. Everybody gets a little something, something. And sooner or later, the only language that we will know is win. So until next time, I'm Mark Monroe.
And I'm jolyngc in a place called Free.
And hopefully for you, this was also your come up. We'll see you on Thursday because we got a pretty dope announcement to be had on that episode. So definitely be glued there because we're definitely making some transitions. Guess what, Jolyn? We're making a transition like something.
Like what?
Like this one. See y'all. Peace.